Hello and welcome to another update video about PAXG. PAXG I covered a few months ago and I've covered it so far I think 2 times or so in videos. So I just would like to give you an update. A few people have asked for it, and what I'll do, however, I'm not going to analyze the PAXG chart. I'm going to analyze the gold chart. First of all, because it's a bit more precise. Then because the PAXG price is completely adhering to the gold price. Yeah, it is basically crypto gold, you could say. So the PAXG is basically a cryptocurrency that you can buy that is backed by gold, and therefore the PAXG price is following the gold price pretty much exactly. Yeah. So if we take a look here, PAXG 1808 US dollars. Let's go to the gold futures. Can do that. And here 1808, therefore it makes more sense to analyze it. Also, it has a longer chart history. So if you're analyzing PAXG or gold, it's basically the same thing. Because this is a crypto channel, of course we're focusing on PAXG, but I'm still analyzing the gold chart because it has a longer chart history, and I you know, it just makes sense, because if I only analyze PAXG, I don't have that much of a chart history. So from an Elliott wave point of view, we want to do gold. Now, I will start with showing you what I said in the PAXG video last time. That was in March 2022. We were at 1985. And again, always bear in mind, in my opinion, the Elliott wave method is the best method to analyze trend reversals. Yeah, so let's take a look at that, and then we can take a look at the updated chart. See, yeah, now you're in a similar wave, A, B, C. And that's what I mean. If the $1,600 doesn't hold, you're going to see much lower levels of, you know, 1,377 US dollars and below. Okay. And that is very, very critical. So it is really, really striking, this similarity between this fractal and what we are currently doing. Yeah, you can see that. And if that plays out the same way, then you're looking at, in the next step, quite a significant sell-off. The minimum sell-off, what I do expect here, is this $1,720 to $1,600 level, but it's not guaranteed it's going to stop there, because if it doesn't, then we're not talking about a wave 4 here. Then you're getting a more significant sell-off, and it's again everybody. Okay, so I think that is enough. So I remember when a few weeks ago or even months ago, had some discussions with some people that that said because of inflation, gold now needs to go to the moon. And gold is in a bull run, but in my opinion, gold was not in a bull run. Gold was in this wave B, which is just a corrective wave. And I think this is now playing out. So this is what I told you last time already. Looking at this larger time frame fractal, for where we are coming from, actually, I do believe, and this is the long history of the gold chart, here the wave 1 back in 1980, coming down in a very long wave 2 into the 2000s, a wave 3 to the upside, peaked in 2011, then here a wave 4 to the downside in 2017, and now we are in this wave 5. But within the wave 5, you've got your 1, 2, 3, yeah, and this third wave is now was already complete in 2020. We've now entered this wave 4. This is what we're currently working on, this A, B, C. And when that is complete, we will enter another wave 5. So I'm not bearish here on gold. I'm just telling you, and that is what I told you last time in March already. We are just in a correction here. And you can say that this whole, pretty much this whole correction here, you can call that a correction, because we haven't really made a new high. You know, 2011 was the previous all-time high, and then it has taken into 2020 to make a new high. But even here, we couldn't really push through. So we're pretty much at the same level as, yeah, you could say pretty much 10 years ago, 10 to 11 years ago. So it's a bit of a shame for everybody who bought gold here at the peak. And it will go higher, but it just takes a long time. You can see how long these markets take sometimes to recover. But where are we now? So last video, obviously, we were at nearly $2,000 again. Everybody was going crazy on gold or PAXG, but this was for me just a wave B. And again, that is where the Elliott wave method is so powerful, especially sort of on the medium to longer time frames. Yeah, I mean, the shorter time frames, it gives you a really good view as well. but it takes a lot of invalidations to get to the right wave count. The shorter time frames are very fragile, but they are still useful to build these medium time frame patterns. So therefore they are useful and needed, absolutely crucial, these shorter time frames as well. But on the medium time frame, if you have the right wave count, you can really precisely ride everything. So we had here this resistance area that we peaked to, yeah, we touched it, and then we have come down in this wave C. In my opinion, the wave C has already started, and in my opinion we should get into this area, which is between the $1,600 level and the 1720 level. From that point of view, nothing has changed from the last video. It's always still good to give you an update because it has been months ago, but there was no need for an update because everything was going according to plan so far. You can see here that this is the area that is located between the 50% fib level and the 38.2% fib level for a wave 4. Just the most likely scenario. You would normally not expect it to go below the 50% Fibonacci retracement level. If it does, we can expect much lower prices, and then we can look at something more around the $1,380 level. That would be the next major support then, okay? But here in this area, I would expect the reversal to the upside. It's not there yet. I think it may take a while to really get there, but it seems like that the sell-off finally started here in March 2020, basically when I made that video. Yeah, after that we moved up a little bit higher, but it was only a wick here on the weekly, and then we had this reversal, yeah, double top, and started to come down. And from that point of view, you can also take a look at the C wave fractals here, and from that point of view, I think we had a wave 1, 2, that here was a 3, 4, and we're now in this 5th wave, and that could take us really into this target area. One way of calculating this is to take the length of the wave 1, which is basically here, the length of the wave 1, to add it to the wave 4 high. And then we get a target for this 5th wave, which is the ideal one would be the 100%, yeah, which is the $1,683 level. So watch that level. If we go below that, I think we have a chance here to go to 1,600, which is the 50% fib level. And then the very last chance I would give it is the 1.618 fib extension, which is 1560. Yeah. So going briefly below the $1,600 level is not a problem. But if we go substantially below it, retest it from below and go further lower, then I think we're going to see much, much lower levels. But at the moment, I'll give it the chance to reverse in that target area. Is for me currently the most likely scenario, and from here we would then enter a wave 5 to the upside. That could take us sort of into the region 2,500, 2,600, yeah, depending on a little bit on how much we come down here. And that is my view on PAXG. Yeah, so again, we looked at the gold chart just because it's a bit more precise, bit more exact, longer chart history, and it is the same price anyway. So very well, when you look at PAXG, you could also analyze the gold chart. But this is what gold is doing at the moment. So might also be interesting for anybody who is obviously invested in gold, which, you know, is obviously a good element in any diversified portfolio strategy. Okay, so hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership. Thanks a lot for watching. Bye-bye.